This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today's 6/13/22, show number 398. Well, ugly things happening in the markets today, Nick, huh?
It's a bloodbath out here, Kerry, to say the least. It's a very ugly Monday. The decline in the markets is continuing this morning from Friday. The S&P 500 index is now breaking actually below the May 20th lows, and that was a pretty solid low for a good counter-trend bounce, and that's getting eclipsed today. The real story, though, is the 5-year Treasury note yield is inverting against the 30-year. Right now, you have the 5-year note at 3.41%. The 30-year Treasury is at 3.33%. So that's inverted. And then you have the 2s and 10s very close to an inversion as well. They're not there yet, but they are very, very close. And that, when you get an inverted yield curve, that's all the market needs to see. It goes into freak out mode. And it is freaking out today, to say the least. So I think that's really the reason for the decline. It's a broad-based one at that, and nothing is being spared. Even the beloved energy sector is getting hit today as well.
Right. The only thing going up today, Nick, is the U.S. dollar.
Yes, the dollar is very strong today, and in all fairness, the dollar has been strong for a while. So, what people don't realize is that when the dollar goes up, that is a negative for the markets, and the dollar is about to break it's right at the May high. You can see how the stock market is testing the May lows, the dollar is testing its May highs, and it looks like it's starting to peekaboo above it. And this, I believe, for the dollar, is probably a good 10-year high. So, that's what people don't realize. The last time we were this high for the dollar, you have to go back to 2003. So 9 years, 9-year high for the dollar right now.
Yeah. And that is significant. It's almost at 105 on the Dixie.
Yeah, the Dixie right now just shy of 105, but we are just about there. And, again, there's nothing to say the dollar can't go higher from here.
Can it go to 110?
Sure. Why can't it? I mean, the dollar back in 2003 was around 120. So why can't it, why can't it get up there in due time? I haven't played the dollar recently, but I've been a dollar bull for a bit. And again, I don't see anything really getting in the dollar's way at this stage.
All right. So this week is Quad Witch, and we could have some real chaos in these markets. Where's the PPT when you need them?
Well, as you know, a quad witch is where you have 4 different asset classes expiring in the same week. Buckle up. This could be very, very volatile and filled with some serious whipsaw and institutional game playing as we see every options expiration. But before that, on Wednesday, we're going to have the FOMC announcement. The Federal Reserve is going to conclude their 2-day meeting, which begins tomorrow, and the central bank will make their interest rate policy decision for the U.S. Now, they're expected to raise the Fed funds rate by 50 basis points, which everybody at this stage of the game thinks it's not enough. Yeah, it's baked into the cake already. And a lot of investors now are expecting the Fed to do a bit more, perhaps, even 75 basis points or even a full point. They're still way behind the curve. Remember, they need to catch up to the 2-year Treasury note yield. And until they can do that, they really are behind the curve. They need to catch up to that 2-year, which is now at about 3.2%. And again, the 2-year note was up 25 basis points on Friday, up another 16 basis points today. So, the Fed is in a tough position here, and hence you see the market reacting that way.
And that is a huge move, too. We should emphasize.
Absolutely. Enormous.
Right. So gold is really getting slammed down $45 on spot.
Yeah, gold is getting pounded today. Everything's getting pounded today. There doesn't seem to be much that is, not getting hit today. Precious metals are under a lot of pressure. Silver down 4%, gold down 2.5%. Gold miners, which had a really good day on Friday, they're getting absolutely creamed. Looking at the GDX, which is the gold miner ETF, down 6%. Silver down almost 4%. So precious metals are deflating along with everything else at this stage of the game. And it's a pretty nasty decline, to say the least. So I think everybody at this stage of the game, buckle up. We got the Fed week. It's not going to go straight down, but this is a pretty nasty Monday.
And when you see gold go down with everything else, it tells you it's a liquidation event going on, right?
That's right. That's generally the case. And, there's somebody out there caught with their pants down. That's what the old saying is in the market. So we'll probably have some hedge fund blowups here, probably have some people that were, on a lot of margin, highly leveraged. They're exploding. That's why you see gold down. That's why you see energy down as well. I know a lot of people are saying, Shanghai is locking down right now, doing a second lockdown, or Beijing is. I don't put that much weight into it, but energy is getting absolutely creamed today, and that's definitely a big event.
Big event. I mean, palladium, platinum, everything selling off. Silver is down nearly $1 today.
Yeah, silver, is getting really hit, but again, this is going to lead to a great buying opportunity in just about everything out there at some point in time. But the precious metals, as you know, I think still have one more major dip ahead of them, and then it's going to be your chance to get in on them. And a lot of people are going to be scared at that point in time. But I wouldn't rule out, if the markets start to really dip here, that precious metals go that way. But eventually, precious metals will be, a lifetime buying opportunity.
Yeah, the coin of the realm. Hey, and I'm sure glad that you don't understand cryptos or Bitcoin, because if you did, you could have really gone broke.
Well, I have to say, the crypto market is broken now. It's completely, it's now at 23,000 on the futures. There's nothing great out here. We talked about crypto being in a downtrend. And again, I said, if that consolidation pattern breaks, watch out. And really now when you look at we'll use Bitcoin as the proxy here, but if you look at Bitcoin now, I would really be careful, because I don't even see a solid bottom until this thing gets to around 14,300.
Hey, right now it's dipped below 23,000. And when you look at it just the past 5 days, man, it's a waterfall there. It was at 30,000 5 days ago. Now it's at 20, almost 22,771 I have, but that's a kind of meaningless number. When you look at the monthly, it's downright frightening. When you look at the annual rate, you see the double top there, exactly what we called back in November. We called that double top. Remember, actually, it's almost a triple top there. And now it's lost 2/3 of its value from its peak.
Yeah, I mean, any way you slice it or dice it, this is not a pretty picture. I think that right now, the Bitcoin or the crypto play is really by the wayside here. It's a broken chart now, and anybody that doesn't see that and still is believing in this thing, needs to go to the doctor and get an examination.
Yeah.
Because this is in some serious trouble.
So you mean to tell me, Nick, that cryptos don't always go up?
Well, if you listen to the talking heads on TV, they do. But the reality of it is, no, the cryptos don't always go up. And I would be very, very careful with it here at this stage of the game.
Hey, remember, they used to say real estate always goes up, the stock market always goes up, and of course, cryptos always go up. So if you bought it at 67,000 and you're holding the bag at 22, nearly 22 and a half, you might be tending to doubt that hypothesis.
Yeah, I would say so. And again, the thing about crypto, along with a lot of other things, and I don't want to, put too much emphasis in it, but it was the holders that have it or possessing this instrument. They have to remember that they're not strong holders, right? People, are buying into a story. It's almost like SPACs or, better yet, NFTs or invisible art. Falls in that same category, same class. And, when the selling comes in, and they just see that money evaporate, it's very, very hard to do that, to do anything with it. And again, that's where we are with the cryptos right now. At some point, there'll be a tradable bounce in there, and that's what I think people will have to look for. But right now, they're really, really in a lot of trouble.
Yeah, not to gloat, but, what I've always said is maybe long-term cryptos are good. I kind of believe in the blockchain. I think it's got a lot of applicability and a lot of potential, but it's still a market, and markets go up and markets go down, Nick.
That's well said, Kerry. That's a perfect segue to what I want to say is that I've always felt that something like cryptos that don't make anything and you need dollars to buy them. In fact, if you look at the crypto stocks like Coinbase, which went public on a dollar denominated market, it never really made sense to me to begin with. So when I see things like that, I'm always skeptical of putting your dollars, hard dollars, to work on something that doesn't make anything and you need dollars to buy. It just didn't make any sense to me. And I just can't see governments allowing it to exist unless they have it out there for a reason to maybe psychologically train you to get ready for a digital currency.
Yeah. Central
outside
bank.
of that, that's right. Outside of that, I just don't see how it's viable. They used to arrest people for, carrying around trading Chuck E. Cheese money. Now, they're going to allow this digital currency to exist and hundreds of them.
Yeah. Hey, well, I always said, what are you going to do when they pass a law preventing or forbidding the possession and sale of Bitcoin, right?
That's right. What are you going to do?
Yeah, I mean, you got 10 years.
Yeah, you look at like some countries adopting it, other countries are not adopting it. The countries that are adopting it, are not countries with stable currencies in the first place. So I always found it pretty interesting how these Bitcoin people would say to me, well, El Salvador just adopted it as their currency. I said, have you been to El Salvador?
Yeah.
So I just find it fascinating that, the talking heads can, promote it the way they do. And again, if you're going to own anything, stick with good quality companies, and that's your best bet.
Right. I mean, we might go through a lot of bad things in the economy and all that, but these big multinational companies have staying power, most of them. They got the resources, they got the access to capital. The smaller companies, even the medium-sized ones, going to have a hard time at this.
They're going to have a very hard time with it. And you see that already. You could see that in, the high flying names, the SPACs, so many other companies that weren't SPACs, but they were just companies that weren't projected to make money for 10 years and they were trading at, $400 a share. But look at, companies out there that are pretty useful, right? Company like Zoom. I mean, there's a stock that's trading at around $100 with $600 or close to $600 at its peak back in 2020. So, again, it's the environment that you're in and the liquidity is no longer there. The Federal Reserve is no longer printing or buying U.S. Treasuries and mortgage-backed securities to the tune of $120 billion a month. In fact, they're actually doing quantitative tightening now, and that is a problem. The liquidity has come out of the system, and you're seeing it really across the board now. Even good companies are selling off today. You're seeing a sell-off in energy. Energy's been, one of the strongest industry groups going forward. I mean, and you see it in gold. I mean, that tells you all you need to know. So, money is coming out now, and people are fleeing. Margin calls are going to be, the bells are going to be ringing for them. And, again, we're just seeing a real flight out of equities today.
Yeah. Well, it never pays to bet against the Fed. You're always going to lose.
Well, these are the guys that control everything, right? They put the money in the system. They take the money out of the system. I don't think that they thought, because there's still a fair amount of liquidity still out there, and there's still a lot of liquidity fleeing places like Europe coming to the U.S., I think they thought that this market would hold up a little bit better. Even I did to some degree. I thought we'd get a little bit more of a rally than we did, and then the rally just failed. And that's what happens in bear markets.
Yep, that is what happens. And, well, go over to Nick's site, inthemoneystocks.com, see how Nick has beaten the market consistently over the past several decades. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Emails always welcome, KL@kerrylutz.com. Nick, we'll talk to you on Wednesday.
Sounds good, Kerry.